Hi, good evening. Today is January 28th, and the powers that be were in full combat mode on the little guy, trying to squash that newly fledged Occupy Wall Street movement. All major retail brokerages had problems this morning, and Wall Street Bets was banned from Discord and temporarily banned from Reddit, but now it's back on Reddit. And the army is growing. It now has 5 million members, up 900,000 just from yesterday. Robinhood has removed the ability to buy and trade all of these meme stocks that were squeezing the hedge funds, AMC, Nokia, GME, etc. Apparently, the Robinhood motto, let the people trade, and democratizing finance for all, it wasn't real. They also banned American airline trading as well, so it's kind of funny, and forced liquidated many accounts. And there was so much pressure on them this whole day. David Portnoy said that Robinhood founders must go to prison. Even AOC chimed in and tried to defend the little people. She said that this is unacceptable. We need to know more about their decision to block retail investors from purchasing stocks, while hedge funds are freely able to trade the stock as they see fit. Also, Ted Cruz, surprisingly, in bipartisan agreement, agreed with her. And now they have decided that Senate panel will hold hearings on the current state of stock market, whatever that means. So, of course, by the end of the day, Robinhood has folded, and they have issued a statement that they're going to begin opening up trading in some of these meme stocks. And they also issued a statement saying that it wasn't Citadel that pressured them to stop trading in these stocks, but it was their risk management decision. They had to say that because, of course, the Twitter was full of rumors that it was Citadel who buys their option flow, make them stop trading the stocks because Citadel bailed out Melvin Capital, who was short Jamie. And rumors were that Citadel has reloaded their shorts right before the Robinhood stopped trading GME. But as of right now, as far as I understand, the 13F disclosures do not require companies, hedge funds, to disclose their short positions. Maybe that should change. Maybe it will. And of course, there were also points that Ben Bernanke is senior advisor to Citadel, and Yellen got 800,000 in speech fees from Citadel. So all of these coincidences, I'm sure. But either way, Robinhood is trying to open up the trading again. And all other brokerages as well were banning the meme stocks. Interactive Brokers also instituted 100% long margin and 300% short margins on all of these stocks. But of course, they had no option trading since yesterday, even on 100% margin. I tried to buy one put position on GME yesterday, but they said that they wouldn't allow it. And the other brokerages, Merrill, BofA, Oppenheimer, all of them also put the stocks on the restricted list. And of course, Interactive Brokers as well. The CEO came in on the CNBC trying to do damage control and was trying to school the customers, saying that you need to pay attention to what you're buying and do not buy stocks because of the short squeeze. It's not a game. But apparently, I wasn't even able to buy a put on it as well. Of course, Stephen Cohen also came out on Twitter today taunting the people in poor taste, in my opinion, but he's again complaining that I'm not feeling the love on the site today. Trading is a tough game, don't you think? To which, of course, Twitter said that insider trading is an easy game, though, right? And apparently, he is down 15% here today. And David Portnoy, of course, defending the little Robinhood people, saying that he should go to prison. And so it's the war of the billionaires, and little people get footballed in between. And also there was another billionaire on CNBC today, Leon Cooperman, lamenting that little people are making money in stocks. Apparently it's only for him. He said that people are, and I quote, sitting at home, getting their checks from the government, trading their stocks. The arrogance of the billionaires is just amazing, so out of touch. And of course, the GME stock today continued its musical chairs on crystal meth. It had a high of $513 and a low of $112. And I guess that's when they liquidated the poor Robinhood traders and closed at $193. And now it's even more up at $265. So the saga continues, and the borrow fees are actually going up as high as 250% today, 250% for borrow fee. And apparently yesterday, long-short hedge funds at GS Prime Brokerage had their worst day ever. And another thing that today Musk was piling in on the short sellers and saying that you can't sell houses that you don't own, you can't sell cars you don't own, but you can sell stocks you don't own. Maybe it's all BS and shorting is a scam. So we will see if they will outlaw shorting next. Like Victor said, the house always wins. That's the point of exchanges, it seems to be, to win for them and for their insiders. S&P 500 was up 120 points today from the low, pretty much erasing most of the yesterday's sell-off, but then sold off abruptly at the end of the day, down 50 points. I'm sure triggering lots of margin calls for both longs and shorts. And Nasdaq had the same trajectory as well. And notable for today, the Wall Street bets bros were moving into silver and teaching their followers how to make money in silver, which ended up over 5.5%. Bitcoin was up a bit and was at 33,000. But the joke of the day is that GME is the new digital gold now. And it's only 3% of the Bitcoin market cap. So there is still plenty of room to go. So the price target for GME is $9,000 to catch up with Bitcoin. Now that value is all arbitrary and there is no any kind of reference. Anyway, Victor, what do you make of today's S&P trading?
I'm sort of stunned. You gave a good summary. It's all consistent with the strong, who are the market makers and the members of the exchange and the banks, the institutions, must win. And the market is designed to favor them. And they pulled out a lot of stops today. They pulled out a lot of tricks in their bag to make the public lose. Tomorrow is an options expiration, a non-quarterly options expiration. So there should be quite a bit of excitement. The last two Fridays have been down. So, and those, as you say, there was a decline of 50 points in the S&P from 330. Closed its trading at 37.68. Still up on the year. So there'll be a lot of, it closed at 37.47. NASDAQ is up a few percent on the year. There are a few you say that this Bitcoin is GameStop is up again after the close?
Yes, it is. It's at 250 after closing at 190 something.
Well, the idea that the market is there to facilitate trades by the public, I think, is receives a big blow today. It's funny, the same thing happened when I started trading in full in 1979. Gold had gone up from $150 to $1,000, and silver from $4 to $23. And the members had for a long time made money by being short, and they were losing a lot. And there was, instead of Robinhood, there was a big buyer, Hunt, who was a big oil man. And the members met, same as all the interested principals met today, and they banned buying in silver, just the same way they banned buying in GameStop and the others that were football. And silver went down from $20 at that time to almost straight down to $7. And gold went down from $1,000 to about $400. So history repeats. What was going on in the political front today?
Well, outside of every politician chiming in on the GameStop, memes is what driving politics. There is a call, there is an option expiration, and if you look at this chart from Zero Hedge, the call option volume yesterday was the highest ever. So the expiration should be interesting tomorrow. There are weekly options expiring every Friday. So, and on the COVID front, there's an interesting chart that I saw where the flu basically has disappeared. If you look at the chart, you can hardly even see it. It's this red line at the bottom of all of the charts, and everything has been replaced by COVID. So that's another interesting coincidence, I'm sure, that every viral infection is now diagnosed as COVID, and the flu doesn't exist.
Okay, I have nothing more to say today. We should have a reasonable Friday. I would expect, after going down 120 points for the S&P to be up 40, 50 points, making back only a third of the previous loss. Sort of disappointing. But again, now we're 2 days away from all-time high in stocks, and they'll have to do their thing, get back to the all-time high. There should be a lot of talk about whether it's up on the month or not, because that's supposedly the January effect, the January phenomenon. There's a shibboleth that technicians wrongly believe in, but there'll be a lot of talk about that. And will be very exciting and mysterious, as we always say. Thank you very much, Ms. Senator.
Thank you.